Good afternoon, everyone. On behalf of Akmil Advisor and LT Elevator Limited, I welcome you to the virtual meet of LT Elevator Limited. LT Elevator Limited, incorporated in 2008, specializes in elevator and related components, offering end-to-end EPC and O&M solution with an 800 unit annual production facility in West Bengal, supported by in-house R&D and quality labs. LT Elevator serves residential, commercial, and public clients. Now we welcome our guest, Mr. Vyas Gupta, non-independent director.
Thank you and welcome everyone to this YouTube live, which is our roadshow for the IPO.
And we have Mr. Mayur Banka and Mr. Rahul Bajaj. I'm going to that. Now we will show a short AV. Now, I would like to invite Mr. Jas Gupta to give a brief PPT.
Sure. Thank you. Am I audible? Can
Yes.
someone confirm if I'm, yeah, okay.
Yeah.
Okay, so let's go to the slides. First, I'll give a quick background about our company. Our company is LT Elevator based out of Kolkata, uh, where we also have our factory and corporate office. Our entire manufacturing is done in our factory in Kolkata. LT Elevator was started in the year 2008 by my father. In the initial few years, he was just manufacturing some elevator components for other elevator companies. But around 2011-12, he started exclusively only selling under the LT Elevator brand, mostly in Kolkata, Bhubaneswar, Northeast India, these Eastern India states. Since then, of course, the company has been bootstrapped, and incrementally through accruals, he has seen growth over the years. In the year 2019, we also got in the mechanical car parking business because it was a very adjacent business to elevators, very similar clientele, very similar manufacturing process, very similar engineering, and therefore it was a natural extension of our business. We started a mechanical car parking business also, which was under a separate company called Park Smart Solutions, which now very recently has been made a 100% subsidiary of LT Elevator. Now, between both these businesses, elevators and mechanical car parking systems, in our early years, till the year 2019-2020, which is mostly to say pre-COVID, our entire focus used to be only on the private sector real estate developers. Correct. So we used to only cater to private sector projects, working with real estate developers or individual house owners and the likes. But it started becoming clear to us somewhere in 2019-2020 that the way the large domestic elevator brands have scaled, namely Johnson Lifts and to some degree Omega Elevators of Gujarat, having studied their growth over the last 2 3 decades, what we realized is that a lot of it came on the back of securing high margin government projects. Okay, and therefore in 2019-20, we also decided that we should focus on government projects, which will not only increase our profitability but also give us a pan India reach. We will be very quickly able to scale beyond East India to other parts of the country. And of course, there is massive volume, as we all know. Still, the majority of infrastructure spend in our country happens by various governmental bodies rather than private sector. It is natural that elevator being a product used in infrastructure projects, it is quite natural that the government through its various bodies and ministries and departments is a big buyer of elevator products. Also, around that same period, 2019-20, there was something called Smart City Mission going on in the country, which is still running. Now there are talks of having a Smart City Mission too. The smart cities, one of their mandates was also to ease up urban congestion uh, in the 100 or so smart cities that were set up, uh, solving for urban congestion, better traffic management, and solving congestion via mechanical parking. This was in their plan and blueprint, and therefore we found an opportunity there, and we entered that space because we were in the mechanical car parking space. We thought uh, working with smart cities is a good way to go about it. They are well funded, central government run, and therefore that also on the mechanical car parking side, we also started building a government business. So as of today, on both the elevator and mechanical car parking side, we have a robust private sector network where we work with real estate developers and individual house developers or owners, and we also work with various governmental bodies from the year 2021. That is a basic this thing I've given you about the company. You can go to the next slide. So this is just overall numbers of our business, LT Elevator. We've been in business for 15 years. Current capacity elevator is roughly 800 units per year. We do, as you've seen in the video, unlike most, I would say, elevator companies of our scale or smaller, we do all of our engineering and manufacturing in-house. In fact, greater than 80% of COGS has some value addition done in our factory, and that gives us complete control over the product. Even long term, when we are servicing our own installations, it gives us some sort of advantage in having the IP for the product that we've installed. We stand today uh, at an order book of roughly 200 plus crores. These March numbers was 202 crores. Today is slightly higher. We have presence in 25 states, which 5 years back used to be only 7 states. So, like I mentioned, when we decided that we want to procure elevators from various governmental bodies and use that as a growth lever for our overall business, we started expanding in southern states of India like Telangana, Andhra Pradesh, Tamil Nadu, Maharashtra, Gujarat, and all of these other various states outside East India. Uh, the FY25 numbers that you see, the consolidation, like I mentioned, for the car parking business happened only recently in December 2024. So it is not a full year consolidation number that you are seeing on the screen. The full year consolidation number is closer to 75 crores at a 10 crore PAT. What you see on the screen is consolidation of 1 quarter, and the number is 56 crores and roughly 8.9 crores of PAT. We have a team of 355 plus. We take a full stack approach in engineering, manufacturing, installation, service. So all of that is, as of today, done by predominantly our own team. Almost 90% of the installation service is also, as of today, controlled by us. Over time, of course, we might be engaging some contractors and outsource some of these site level jobs as we scale geographically, and it's easier to do that. Next slide. So the management team as of today from the family, of course, we have other people on the board, and we have a very robust management team in the company to oversee overall operations of the company. From the family, which is the majority shareholders of the company, it's both my parents are involved fully in the business, and I am involved in the business since the year 2018. Next slide. Next slide. Yeah, sorry. Next slide. This we've already mostly covered, that we are in two businesses. Both businesses we take a full stack approach in engineering, manufacturing, installation, and of course, like I mentioned, there is a after sales service or annual maintenance contract business for all pretty much all the installations or products that we sell. The after sales or annual maintenance business of the company, that is a very lucrative business. It is a high margin business, and that is a profit pool that for a company like ours, it grows every year, because not only do we add new units to our existing portfolio of installations, every year we are adding new units there, but also the units that are already under maintenance, there is typically a escalation of 5 to 8% that we charge from the customer. So this is a lucrative part of the business, and as we grow this, the maintenance business in itself, uh, we expect that it should continue to grow faster than generally the pace at which the business is growing on average. Next slide. On the elevator side and the car parking side, we have been engineering products for last 15 years. As of today, we cover the entire spectrum of products from manual lifts and automatic doors, uh, and all kinds of finish are available with us. The highest specification elevator in terms of rise, if I say that we have indigenously developed and installed and running successfully for last few years, is a G plus 32 elevator at 2.5 meter per second. So in some sense, technologically, if you were to ask me where are we capped, we are currently capped at G plus 32, 2.5 meter per second. Just rough study of the market tells us that covers more than 90% of the overall elevator market. Uh, Most of the market falls well below the G plus 32 2.5 meter per second specification, and therefore the portfolio that we have developed covers most of the market essentially, technologically. Next. These are some other specialty elevators we deal with: home elevators, goods elevators, and all of those. Home elevators is a segment which is very niche, but it's a very high growth market. There are not many established brands there. It is still a nascent and sort of scattered market. We have developed a product now over last 1 year, which we feel is a winner product, and there we are taking an approach of doing some distinct marketing through social media and all of that. That is still in the pipelines. We are fine tuning the product as of now, but that is a business which I am particularly very excited about. It is a B2C kind of business, and we are thinking of a good marketing strategy to push that in the next few months. Next. Next. Yeah. So car parking again, we do the entire range of products, and it's just a demonstration of that. Next. So we've already seen the factory of the video of our factory. Just to make it clearer, there are 5 different units next to each other that we acquired over time through accruals, and each unit is for a specific purpose in the value chain of creating an elevator, and we've already seen the video. So skip. Next. On capacity utilization, so we are roughly currently today operating at 70% capacity, but this is in terms of machine capacity and land utilization, I mean the area that we have. However, I would like to add that we are still working on a plan to set up a new integrated unit next year. In the current unit, because it was set up incrementally over a decade, it is not the most efficient to scale our business and be very consistent with what we are producing and selling. It is in our plan. I mean, it's in the works to set up an integrated unit next year. That we are planning to make with very high quality benchmarks, eligible for all the necessary certifications, even for export, as we want to expand into that market few years down the line. Next. Is just all the states where we now have elevator installations. Like I said, just over the last few years, we've been expanding through government projects. Next. This is the car parking business. It's almost roughly 5 years old. We are gradually spreading here. Next. This is segment revenue. One thing that this is only like standalone for LT elevator. You will find that there is some amount of mechanical car parking here. It is because when we were taking the few large mechanical car parking projects that we took at that time, our other mechanical car parking company, ParkSmart, which was still new, wasn't eligible financially, and therefore those projects have been taken under LT elevator. The rest is all there. Next. This is the subsidiary. You can see the numbers. I mean, the spare sales are still low because most of the installations are only 2, 3, 4 years old. As the years go by, of course, there'll be a spares component and a AMC component, which we will separately start reporting. Right now, it's just clubbed under one header, but we'll separately start reporting the maintenance contracts also as it becomes significant. Next. Yeah, so this is an interesting slide where, like I explained to you, that around COVID and after that, we certainly decided that on the private sector side, we wanted to scale cautiously and get to a point where the business coming from government was 40 to 50% of our overall revenue. The reason, now I'll just go into, in this chart you can see over the last 3 years the share from government of revenue, certainly on order book side, it is now higher than the 42% you see here. It is closer to 50%, which is where we want to keep it. But now I'll just go into a little bit of details of why this strategy we are pursuing basically, and try to show you why I think it's the right strategy to pursue for a domestic elevator brand. So typically, on the private sector side, there are two markets. There are three markets roughly. One is your luxury real estate projects. Okay, the luxury real estate projects are your high rises selling in the HIG category. There, the cost of elevator the builder is not really very concerned about. Plus, every building material used in a luxury project also typically people would want it to be a European or American brand, because that is what is being marketed in those projects. That is a segment fully captured by Toshiba, Hitachi, Mitsubishi, and to some extent Kone and Otis and Schindler, these guys, right? So that is the luxury segment where we don't wish to operate, we cannot operate, neither can Johnson or Omega, which are much bigger than us, neither are they able to operate. The second segment is mass housing projects or voluminous projects, even commercial projects, but voluminous, where typical procurement done for elevators in a project like that could be 50 plus. Now, even those projects, what ends up happening is they become super competitive because all the large players want to increase their numbers. They are fully focused on acquiring those projects, correct? And therefore, when you have 5, 6, 7 competitors competing to get a project, basically those become low margin, and the only reason to take those projects up is because there is an annuity income in maintenance on the back end, correct? Now, as a company which was until just a few months or a year back, we were bootstrapped, and therefore that is a market we could not really participate in uh, without giving massive discounts, and that is not something we wish to do at the time, because we didn't have an alternate profit margin pool. So unless you have a pool of profit coming in from somewhere, you can't participate in those large projects, correct? The third market, which is actually the biggest market, is your individual buildings or two buildings built together by a builder, which is most of the market, uh, where the typical procurement is for 3 to 4 elevators. Now, that is a market overlooked by a lot of players, especially the larger players, and that is where the margins are better, and that is the market we were also quite focused on so far. Uh, so, just giving you a context. Now, once we start increasing the share of revenue coming from government, and that gives us a good profit pool, that we can then some of it reinvest into competing on larger residential or commercial projects which are voluminous, and build our AMC business on the back end, correct? So far we were not doing it. The second thing is, when we take up a government project, the typical size will be 15 to 20 elevators in a single tender is what we are eligible for now. What happens when you take up a 15 to 20 elevator project is, very easily you can set up a service team in whatever geography you've taken up that project in. It is high margin, there is a maintenance business coming from there, and the team becomes self financed basically just through those AMC contracts on those elevators. Once that happens, it becomes far easier when you have a service network spread across the country to then deploy sales effort in procuring private sector orders, correct? So, given all these reasons, it made all the sense to us that the government business for us should be 40 to 50%. That is the magic number at which we can scale our overall business and continue to maintain that ratio for a few years to come. Uh, and scale like that, right? So just giving you some context on what our strategy has been and demonstrating those numbers to you. A lot of the other numbers also of the business that you see over last 3 years will become immediately clear with this as our backstory. Next. Yeah, on Park Smart now, since I explained the eligibility, on the parking side now, I'll talk about we have taken, so unlike elevators. Now elevators, let me just also explain that 4 years back our eligibility for was only for up to 50 lakh rupee tenders for elevators. Today we have completed a 5.5 crore project, so and we are eligible to bid for up to 7.5 to 8 crore single tender of supply and installation of elevators. We are eligible from most government bodies to supply that up to 8 crores, 7.5, 8 crores. On car parking, these are larger infrastructure projects, EPC in nature, uh, and so far we have taken up 4 projects which are all under execution. The largest project we've taken up is by Shillong Smart City. It is a 43 crore rupees single tender for developing the mechanical car parking lot in the heart of Shillong, which is called Police Bazaar, to solve the entire congestion problem of that area. This will be for 405 cars, basically. Uh, there's another project of 33 crores which is under execution today. That is in Imphal. Similar location, I think they call it Bada Bazaar or Police Bazaar. I mean, the official name is Nagamapal. But that's also a large project in the heart of the city for 33 crores. Both these projects, I expect that we will complete by end of next year, calendar year. Now, what it will do is we would have credential of having completed a 43 crore rupee mechanical car parking project and a 33 crore rupee mechanical car parking project. What that does the year after next is pretty much any mechanical car parking government project from some municipality or urban affairs or development authority, any of these government projects that come up, we will be one of two, three companies in India which is definitely eligible to participate. Correct. So we have largely opened up access to 100% of government procurement for mechanical car parking just on the back of these two projects which we are currently executing. Right, and these are large voluminous projects. Other than this, we also have two other projects running in Shillong Smart City itself, and there are various other development authorities and municipalities we are actively engaged with. And the target is that every year, of course, the momentum will continue. But even now, every year we do hope to. I mean, we do intend to take work with at least two or three municipalities or development authorities, so that over next 10 years, we would have worked with maybe 50 cities in India and help with solving this public congestion problem in various cities and towns. Next. Mayurji, sorry if I need to speed up, please tell me. I hope I'm not going very slow. Its pace is okay. Uh,
No, no,
this
you can proceed with this.
slide we've already explained. We've shown you the video of the factory. You would have understood that most of the projects are developed by us. Most of the components of the elevator are in fact developed by us. And like you also explained, greater than 80% of COGS has value addition done in our manufacturing unit. So we do really offer a full stack solution. Next. Next, please. Can we go to the next slide? I think it's stuck. Industry overview, we've put some global numbers here, and but I'll talk about the overall industry size and all of that. I think it's a common question, so I'm sure at some point we'll come back to that. and we can bifurcate the industry size and all that at that point. Go to the next slide. Yeah, next slide. Next slide. All the financial numbers, I will request Acmil team just spend some seconds on each slide and you can keep switching, and of course there'll be questions, I assume, so we'll take those up. Just one thing to keep in mind, that the consolidation has happened in December, so some of the ratios you have to adjust for that, but that's it.
Yes, we can continue
Next,
now.
next slide, please. You can keep going through the slides, I think. Issue overview, I think, Mayurji, would you like to walk through this?
Yeah, I will take it.
Okay.
Good afternoon, everyone. My name is Rahul Bajaj, and I have Mayur Banga with me. We represent Horizon Management Private Limited. We are the book running lead managers for the issue of LT Elevator Limited. Thank you for taking out time from your busy schedule to join the virtual meet of LT Elevators. Just to brief you, the valuation of LT Elevators has come out to be 148 crores, and the issue size is 39.37 crores, out of which 5% would be allocated to the market maker, and out of the net issue, 50% would be allocated to the QIBs and anchor, and 50% would be allocated to retail and HNIs. It would be really great if if you all can participate in the issue and make it a huge success. Thank you so much. The price size is 1600 equity shares. Thank you.
Yeah, I think the path ahead, we just want to continue to pursue the strategy, which is roughly 40 to 50% business from various governmental bodies, the government through all its bodies. But when we talk about governmental bodies, we only include central government departments and ministries, right? So generally, we don't work with state governments, and I mean, our participation is absolutely negligible unless we are very sure that there is some alternate financing for that particular project involved. We would typically never work with any state government, so only central government bodies. That market is mostly, uh, there are 3 to 4 domestic companies competing in that market. Now, our eligibility is roughly 7 crores. By end of next year to middle of 2027, our eligibility based on the orders we are executing today will become roughly 15 crores single tender. Once that hits, that makes us eligible for roughly 80% plus of whatever government tenders come out through CPWD or NBCC or railways and all of these departments. Will be eligible to bid up to it. I mean, will be eligible for 80% of that market by end of next year, middle of 2027. As that scales, private sector, now we are expanding beyond our home market in East India, setting up strong branch offices, building a good distribution network in all of these places, and both businesses will scale very parallelly. Car parking side, again, East India, we are now market leaders in that industry. It's a higher growth industry, smaller industry. Also now expanding in West and South. Mm, like I already explained, by next year we would have completed a 43 crore and a 33 crore rupee uh, project, which will make us eligible for pretty much any project that comes in India. After that, we are more or less eligible to participate along with just two or three other companies. It's a new industry. The market leader doesn't even have 10% market share, 10-12% market share as of today. And therefore, there is an opportunity there to really grow and become one of the leading brands. And we are just on that path very aggressively. Yeah. Next. Yeah, we just explained everything we are doing. Next. Next. I think mostly we've covered most of the points. I think yeah. Can go to the end of
Yeah. Thank you, Tim, for the PPT. Now we will start with the Q&A session. First, good evening, everyone. Hello.
Good evening.
Yeah. So first is how many listed peers you have and what differentiate you from them?
Sir, so unfortunately, there is no apples to apples peer that is listed. The closest that I found was a company called Aron Industries, which is in the manufacturing of elevator components. Okay, so they make some of the key components of an elevator, all of which we manufacture ourselves for our own brand. But as you know, there are very small, there are in fact many small contractors all over the country who need to buy elevator kits and install it at very low cost. So Aron Industry largely caters to that market. They manufacture some of those components. So in a way, they are in the elevator business, but very different. They have a very B2B business without a maintenance component. They are just equipment sellers, basically. So that's the closest we have. There are no other listed peers which are like for like. Another one is a company called Affordable Robotics, which also again they are in the mechanical car parking business, but mechanical car parking business I believe is only 15-20%, maybe 20.
Sir, you are not audible. Hello. Hello. Are you there, sir? Mayur, sir, you can tag. Sir, you are not audible.
Yeah. See, on the listed peer side, we have our own industries only. There is no other any apple to apple peers of the company. Hope this is
Okay.
clear.
Yeah. Next. EBITDA margin jumped sharply from 11.9 in FY23 to 26.9 in FY25. What are the specific drivers and are these margins sustainable once raw material inflation or competitive pricing pressure
I
return?
think Mr. Yes will be better. He will be able to brief this. Let me take him on the call. Just give us a minute.
Yeah.
Confirm because
Yeah,
I yeah I
he's on the
lost
call.
connection. Very sorry, I lost connection.
Yeah.
Yeah, I
You can
think so. The
continue.
listed peers, did I address that question? I hope.
Yeah.
Okay, please.
So next is EBITDA margin jumps up.
Sorry, Mayurji, I can't hear. Uh, are you able to hear anything?
Hello, am I audible?
Yes, now you are, sir.
Yeah. So second is EBITDA margin jump sharply from 11.9 in FY23 to 26.9 in FY25. What are the specific drivers and are these margins sustainable once raw material inflation or competitive pricing pressure return?
Okay, just some historical context. As everyone is aware, during end of 2021, I mean that period onwards, raw material prices, especially all these commodities, shot up very, very sharply. Plus the motor magnets and coils, whatever all the motor manufacturers import from China, all those prices had shot up very, very sharply. In our industry, what happens is that when we sign a contract with the customer, it's a fixed price contract. There is no variable pricing based on some raw material fluctuation or some dollar rate or anything like that. And therefore, the execution that was happening in the 22-23 period, some of those orders were in fact even pre-COVID, because whatever projects had been delayed when they started moving again, those orders had to be delivered. So some of these projects were in fact taken pre-COVID. Some of these were during that COVID period, 2020, 21, 22. So that 2-3 year period was particularly bad for us in terms of margin, because it's very difficult to negotiate a contract. I mean, renegotiate a contract once the price and terms are already set. It's super difficult to renegotiate those contracts. Again, one could say that now the last 1 year or few months, now that raw material prices are substantially corrected, we also are benefiting from it, right? Because some of these contracts were in fact signed 1.5 years back, and those prices have stayed. And therefore, if raw material prices are low, those margins increase. But that is only half the reason. The other half of the reason for this, and Mayurji, at some point we'll see if segment wise we are reporting or we'll have to start reporting that like I explained, the government share of business and revenue, not just order book, has been going up consistently over last 3-4 years, and those are higher margin orders simply, and that is in line with what we had imagined for ourselves in 2020-21. So both of those things have contributed to the margins increasing. Steady state in our kind of industry, I would expect the EBITDA margin to be uh, certainly north of 25%. So it's not very surprising that it is what it is. Like in our industry, that would be quite the norm generally. If your revenue split and all that is in order, and if your strategy is okay, a 25% plus EBITDA margin should be quite attainable.
Next, with dependence on real estate and infrastructure cycle, what are the biggest risks you see onto demand over the next 3 to 5 years, and how do you plan to mitigate them?
So, see, basically a company our scale, which is we've not even expanded to many states of India in a meaningful way yet. For next quite a few years, all our effort is towards expanding to other states, starting those branches, and therefore even a real estate boom or slight downturn doesn't matter, because we have a big geography to cover. Of course, once you've covered the entire geography, then you worry about a larger macro picture and all that. But at this point, too small to worry about larger macro issues. Next.
On the segment-wise revenue, it seems there is a reduction in revenue percentage of automatic to 56% from 70%. Reason please. Also, multi-level car parking. There was a surge of 20 times. Any further incorporation expected?
So on the multi-level car parking, I mean, it appears 20 times, but it's only 7.5 crores. This is against the two large orders I spoke about for car parking. That's only 7 crores which is built so far. Yes, those two projects are there, and therefore that 7 number will meaningfully increase over this year, next year, and all of that. On the elevator side, now we were in transition between shifting our focus to acquiring more government projects, larger ticket size, and therefore this is a temporary dip that you see this year. This will immediately, the current financial year, this number will be meaningfully higher.
Next. What is the total addressable market for building elevators and car parking elevators? What is our
So the
market share
total,
in that?
yeah, the total market size of elevator in India is roughly $4.5 to $5 billion. Depending on which report you trust, it's not fully captured because not all lifts are licensed, but it's roughly in that ballpark. The mechanical car parking market is roughly 800 million to 1 billion, or soon approaching 1 billion, which is about 20% of the elevator market as of today. Mechanical car parking market is growing, I think, slightly faster than elevator market, but that's where we are today. Next.
Does company has any plan to focus on foreign market and also pan-India presence?
Yes, we are fully committed to pan-India presence immediately. We are already taking a lot of action on that. We are expanding branches. Wherever we have entered through some large government projects, we are setting up proper branches and sales teams and service teams there, and want to have a good pan-India coverage over next 3 years. Exports is still too early to comment. Certainly, the new factory we are setting up next year is geared towards that, to have all the licenses and all of that in place, but too early to comment.
Next. Any plans in the NV to increase the capacity utilization, which is 62%? If so, any plans in the anvil?
Yes, on capacity utilization, let me just explain this a little bit. So this is machinery and area utilization basically, but like I explained, it's not the most efficient setup to work long term because it was incrementally acquired. It's not an integrated unit. We are going to set up an integrated unit this year anyway. This year, next year, as our revenue increases, the utilization will simply increase. But very soon, this utilization will increase basically, if that's the question, as the revenue increases. Right?
Next. Government business risk of trade receivables.
Covered this slightly, but what I have to say is we do no work with state governments. We only work with central government bodies. Their payments are very proper. If the documentation is in place, our first 2 years of doing government business, particularly railways and the central government bodies, it was on our part to do the paperwork properly, where it was a learning curve for us and our team. So there we struggled a little bit, but now we have put a proper team and all that in place. If the paperwork and everything is in order, then the payment risk is certainly not there, and even the payment history of the central government bodies is very good. Yeah. Also, our product can only be used if we continue to service them. And for the most part, since the technology is proprietary to us, uh, it's almost necessary that it is under maintenance by us, and therefore, any elevator that is to be used, certainly the payment would have been cleared to us. That is generally the standard we've seen. Yes, on the government side, only problem from our side has been the paperwork. It was a learning curve for us, and that is what it is. Next question.
Next. How do you see the demand split evolving between residential, commercial, and government sector over the next 3 to 5 years?
Yeah, so I think this is more it's a macro question, which I think basically translates to what is the growth of real estate industry, residential and commercial over next 5 years, and what is the growth of government infrastructure spend over next 3 to 5 years. That is basically, I think, the question. I am too naive to answer that. It's a very macro question. But certainly, like I said, our presence is still, we've not covered the ground that is there to cover. In fact, we've covered a very small part of it. So for us, the only risk with all of this is how slow we are at covering ground. But basically, there's a lot of ground to run. And so minor macro shocks should not really, affect us too much at this stage. Next.
Next, cash flow from operations are negative in FY24 and FY25, despite profit growth. What are the main reasons?
So basically, as we are growing, I think I alluded to this, but we are learning the whole. We were learning the whole government procurement side with respect to paperwork and approvals and all of that, and therefore we had there was a inventory built up. There has been, because the numbers are also increasing. So a lot of money is going towards inventory, and there is also some debtors, and that's why it's negative. It's not. I mean, I'm yet to work on how quickly this will be positive, but I expect this year should probably be there. Yes.
Next, your order book is 20,000 to 85 lakhs, much higher than the annual revenue. How much can you execute in FY26, and what is the outlook beyond?
So, is this a question on what the FY26 revenue looks like? I don't know if how much of guidance I'm supposed to give. I have not been yet trained on this. I think that this order book that is there, roughly 200 crores in our industry, generally we expect to complete it in give or take 18 months. However, we keep adding orders every month. Generally, at any point, whatever order book we see would have been completed in 18 to 24 months.
Next, hi. Given that Park Smart Solution has 62% utilized in FY25, what is the roadmap to increase these to optimal levels?
This is again a capacity utilization question. I would just like to say that in our industry, I'm not sure how relevant capacity utilization per se is, because I think capacity utilization is more relevant to pure contract manufacturers or equipment like suppliers and all of that. In our industry, uh, capacity utilization is simply a function of how quickly you are scaling your revenue, or how many orders you are executing and how quickly. So this will just increase every year, whatever the utilization is.
Next, PPT looks good.
So that is all credit to, I think, Horizon team and Acmel team,
Thank you.
and the one or two inputs I may have had. But
What is the expansion in capacity that is being set up?
okay, so this is still in the works, like I mentioned. But our idea is we want to make one integrated unit uh, in a new location near Kolkata again. But this is still at the planning stage. Of course, we want to spend some time and get the plan absolutely in place. The execution these days can happen very quickly in 9 to 12 months. But hopefully by end of next quarter, we will have a solid plan in place and the execution would have started. That is my target. By next year, we want to start this new facility. How much we are setting it up for in terms of land and shed and building, basically real estate infrastructure, we are setting it up for 5 to 6x scale. Machinery can be incrementally added. Typical delivery cycle is only 3 to 4 months these days, and therefore the machinery, although we will only at the time prepare for 2x, it can very quickly be added. But the land and the real estate, the land and shed and building, that we will build for 5 to 6x capacity.
With the present capacity, how much revenue can you achieve with optimum utilization?
So roughly again, just a number, we can achieve roughly 150 to 160 crore revenue with the current setup that we have. However, in our process over the years, sometimes what we found is the demand for dispatch from the factory is not uniform through the year. We may have some lean periods, and then we have periods of extremely high demand for dispatch of product, in which case we have developed some uh, vendors and factories near our factory who we can outsource some of these processes to. So push comes to shove, I'm sure that we can achieve higher than 150 crore in revenue from the current facility maybe, but some amount of outsourcing and all that may be required as and when required. Next question.
Next, for FY26, what kind of growth do we see? And does our business have seasonality? H1 versus H2?
So again, FY26 growth is again, I think, a revenue guidance, which Mayurji, you'll have to actually, this has come up a few times. Mayurji, what is because I have, what do you say on this revenue guidance question?
No, normal growth you can suggest, but you cannot comment on the numbers and all. Because we
Yeah,
are
but
bound
like
by
any
ICCR
indirect,
guidelines. No. We
yeah,
cannot comment on the numbers
but
and all.
yeah, but commenting on a growth percentage is as good as commenting on a number. I mean, it's very
We
difficult
can we
question
can
to
we
answer.
can we can give some light on how much growth you will be expecting, 30 to 40% or 40-50%, but not the exact numbers.
We can give a range.
Yeah, I mean, yeah. So, like Mayurji says, I mean, he is quite there on the numbers. Expect good growth, basically. Yes.
Correct.
40 to 50% growth is roughly what we have set our internal target for next few years, not just next 1 year or 2 years, but for next at least a few years till we get good pan India coverage. Our government business keeps growing. I think 40 to 50% growth is, yeah, one should aspire for that kind of growth. The business
I think, yes, sir. It's not there. So, thank you, Akmil and management team, for arranging the virtual meet and best wishes for the IPO. Next, thank you, Akmil and LT Elevator team, for arranging this roadshow. All the best for the IPO. So, I think we have covered the majority of the question. So, we'll move forward. So, thank you, team, for the participant. Thank you for joining the
Yeah,
meeting.
thank you everyone. Thank you everyone.
Thank you, everyone.
Thank you.
हो गया